The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 25th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call We Learn More by welcoming criticism than by rendering judgment. You know, folks, like everything else in life, arguments can be managed. When someone is expressing anger towards us or seems to be overly critical, we have two basic choices. We can either defend ourselves or we can learn from the conflict. Always remember that nothing is learned if no one is listening out there. That, folks, is why we have 2 ears and 1 mouth. We always need to listen at least twice as much as we speak. Every moment, every single moment of our life, we're molding our character, and it is our character that determines our destiny. You know, each day we create all of the conditions that now exist in our life. That is, until we give birth to a new way of thinking. You know, part of being a human being is just simply the realization that we are not perfect, and thank God for that. Because perfection, folks, does not exist. It is the lowest standard that one can try to achieve out there. You know, Octavio Paz once said, there's nothing sacred of untouchable except for the freedom to think. Without criticism, that is to say, without rigor and experimentation, there is no science. Without criticism, there is no art or literature. And without criticism, there likely is no healthy society. Remember, we learn more by welcoming criticism than by rendering judgment. Where judgment can destroy friendships, folks, our willingness to listen to another honestly and openly helps us to deepen our friendships out there. 877-927-6648. Let's go take a look at these markets right now. We've got the Dow futures almost flat out here, up 5 points. We've got the ES Mini up 3, NASDAQ futures up 9, Russell 2000 up a couple of points. However, the real story in the marketplace right now, it really is all about the currencies. So I think that is the first place that we need to go take a look at. You know, we had the Cyprus bailed out last night, but it's really going to be the currency market that truly is going to be the test of the pedal to the metal. And let's go see what these markets are doing out here where the rubber meets the road. We're going to go take a look at the currencies, but we first must start off by taking a look at the King. Now, in the King U.S. dollar index here, made a low coming in about 210 this morning. And at 210 this morning, at the U.S. dollar index trade down to, if you're watching us on TigerTV, you're looking at the 10-minute chart for the U.S. dollar index. If you're listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, on your smartphone, you can catch this show streaming live to you. Just go to that homepage of tfnn.com. Over on the right-hand side, you'll see a button with 3 little smartphones. Click on that. This show will stream live, and you can always catch the archive of this show on Channel 9. So we got a 10-minute chart out here. We're taking a look at also on the bottom of the screen, you can see volumes, and then just above that, you see that relative weakness, relative strength indicator out here. But I'm just showing you the U.S. dollar index. We're watching it move higher as we speak out here. And really what I'm going to do is I'm going to switch over and take a look at the daily chart. I'm just showing you when the actual low came in. But let's go take a look at the daily chart out here. Look at that. Who is in control here now, the bulls or the bears? Whereas we had the U.S. dollar index trying to pull back, I thought the U.S. dollar index might pull back to the old resistance line, which, now becomes new support. That is this black horizontal line going across my screen. Really was also setting up with the 0.382 retracement. 81.55 was that magic number. What it hit was 81.83. So it didn't get all the way down there, but you can see here that when it comes now, the U.S. dollar index, when we're taking a look at it, folks, that is nothing more than the basket of currencies out there. So it is the currencies of the euro, the yen, the Great British pound, the Swedish krona, the Swiss franc, the Canadian dollar. It is those 6 currencies that make it up. And it's not an equal weighting structure within there. It is the euro that is the biggest element of it. But we can see here the U.S. dollar index absolutely rejecting any kind of lows out here. And what's that all about? Well, that's all about the euro. They went ahead and saved, I suppose, Cyprus, although a lot of details still not put out there, with the exception of the fact that they're going after all depositors in the bank of, I think it's called the Licky Bank out there, all depositors that have anywhere over $100,000 in there. And, folks, 100,000 euros, I should say, you got to remember, I don't know how many businesses, but there have got to be plenty of businesses that have deposits that are in excess of $100,000. There are plenty of folks out there that had their retirement accounts, thought they were safe by being in cash, even at that bank. Same thing with the Bank of Cyprus. And those folks out there, for doing what they thought was safe, are going to lose. So I don't know. I guess right now you should talk about how wide the range is. They're talking about between 30 to 70%. That's a pretty wide range of what you would lose over 100,000 euros out there. Now, as we take in, and the sell-off hasn't really even begun when we take a look at the euro out here. Of course, when we take a look at the U.S. dollar index chart, I don't know that this 0.786 Gartley sell pattern is really going to hold out there. Now, that's up at about the 83.13 level, so it's still in place, no question about it. But let's peek in on the currencies now. Let's start off by taking a look at the euro-U.S. dollar index here. Coming late into the trading session on Friday, what we did see the euro do was pop through the resistance line. That resistance line is where I have set up right at about the lows here from the trading session on March the 6th, right at about 1.2962 out there. What you can see is even in the last night's trading, this morning, early morning trading here, was a mad dash for the euro, as if folks wanted to buy the euro out there. I think you're going to find all kinds of, if you owned a company and you just saw what happened out there, even though you may know, and it's, just like in the U.S., that, if you have balances above $250,000, it's at your own risk out there. Well, in this case here, and so if you do have that, don't you think you're going to start shifting money around and placing it places? Well, let's just simply not get into the what we don't know. Let's just take a look at what we do know, and that's just paying attention to the charts out here. So right now we've got the euro. It is back inside that area where it has been consolidating here ever since the time frame of March the 18th, so about a week ago. And what we can see here, it's really in a very tight, narrow trading range. It's trying to bust out the support level. The support level used to be, and I'll show you why, used to be the low of December the 7th out there. That was the swing point, and that low was 128.75 inside the euro. You can see that level was tested several days last week. It was tested on the 19th, on Tuesday, on Wednesday, on Thursday as well, and that level held. And then you saw a little bit of a break going through on Friday. Now, what Friday's move did do, as we switch over and take a look at the the weekly chart out here, what it actually did do was it created a hammer candle. So if you're following us on TigerTV, the actual support now is going to be the low of last week's trading session. That's the key level to be watching, 1.2842. That's the level you want to watch. Why? Because now we know where Super Mario Draghi has been hanging out, or anybody in the Eurozone who was supporting euros out there. And that's important because when that hammer breaks, should that hammer break, if you are long, I guarantee you are wrong. And what does that set up? That sets up coming all the way back down into the swing points of August of 2010 out there. Most notably, certainly the first stop is going to be November 16th, 2012, right around 126.59 out there. Certainly this is the weekly chart that we are taking a look at. And so that is where the euro will head if it breaks those lows from last week. So it's why you want to be taking a look at both daily, weekly, monthly charts out there. In fact, let's go take a look at the monthly chart here. Oh, boy, I forgot to do some work there. And as we take a look at the monthly chart, should the euro get down to a level, the high of 126.78 out there, that'll set up a run all the way back down to the July lows. One thing at a time. What you do know, you clearly know where the bulls are hanging out, and what you can see also with regard to the euro, it looks to me like that low is going to be tested. You are inside that hammer candle, unlike when we took a look at the hammer candle on the Great British Pound, and we'll go peek in and take a look at the Great British Pound next. But that hammer candle, very important, very significant out here. Again, that low that you want to have marked down, 1.2842, that is the low of last week. Let's go switch over and take a look at the Great British Pound, because it really is all about the currencies out here. That's what's driving this market. What you know is that we went long the pound. We did that after the hammer candle that took place on March the 12th. We had a nice little bullish engulfing candle out here on March the 13th. That was a nice setup. As you know, if you've been listening to the show here, we've identified the area of resistance. It has been the old level of support. Old support becomes new resistance. As I pull this chart back here, we're going to take a look at the lows from October the 6th, 2011. That was 152.7. You can also take a look at the lows of January 13th. That's the key low out here right now, which was 152.3. You've also got the low of June the 1st out at 152.6 on the Great British Pound. What we said was that was going to be our first area, our first target for the long trade. And what did the Great British Pound do? You can see I've got both a black line and a red line going across my screen here. That is a key area of resistance. And what did the pound do? Got up into that level, got exactly where it needed to go, and now is trading back a bit. We'll have to go down and take a look at a 30-minute chart out here to see what it is doing. But it hit the first target. That's the place where you take your profits, you take portion of your profits, and you just simply adjust your stops on the other side of the trade here. Why? No reason to get out of the trade just yet. No bearish candle yet having formed for the day, so you want to stay tight. You want to stay, well, you certainly want to stay tight. You really want to make sure that you take some profits and you go ahead and you adjust your stop in the currency trade. Can this move higher? Yeah, and I expect that it may do that, but you still need to have smart money management decisions out there. Now, let's go take a look at the 30-minute chart inside here. As we take a look at the 30-minute chart, we're taking a look at I've got this old bearish, I've got this old resistance line, if you're watching going across the screen here on Tiger TV, set up by the high at 9 o'clock in the morning on March the 15th. I need to do a little bit more work to see if that truly is the resistance level. But as we take a look at the intraday chart out here, let's just simply come from this swing point low at 5:30 in the morning. That was on the trading session of March 20th. All the way to the high that was put in here overnight. So far, only about a 0.382 retracement. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go around the world here. Let's go take a look at what's going on over in Europe specifically. Let's start off by taking a look at the DAX. Now, the DAX here up right now about 40 points. That's up 0.5%, but it's really down 1% off of its session highs this morning. So we're going to start off taking a look at the daily chart on the DAX. The high so far, intra-session high, has been 8,030.76. Trading out right now at 79.52. So the DAX, the party over in now what the DAX has done this morning, I don't have volumes on the DAX, would like to. Certainly have the volume. What it has done, it's tested the March 15th swing point. I just don't know if it moved up into that swing point with volume yet. Obviously, there's still several hours left in the trading session out here. But so far, it has at least rejected the low portion of that swing point, which is 79.96.95. Obviously, a lot of time left in the trading session today, but you want to watch to see. Now, if it closes up inside 79.96.95 by the end of its trading session, regardless of volume, it'll want to at least go tag the high out there, or should want to tag the high, which is 8,074.47. Some pretty good support here inside the DAX right now. There's a little bit of a gap left over from the March 5th to March 6th area. The low of that gap is 78.9804. That has held as a support level. It's been tested twice thus far out here. So we'll see. Now, I don't know that it'll get down there this morning, but that would be an area to the downside that you would be paying attention to for some type of signal. Again, that price is 78.9804. Now, if we go switch over into the weekly chart out here, weekly chart still shows that the DAX wants to complete a 1-to-1 A to B equals CD up at the 81.40.25 level. Now, that 81.40.25 level, that's your 1-to-1, but that's also, if you take a look at July 13th, 2007, that's what we're looking at on the chart right now. We can see that the high of the swing point, that is the 2007 high inside the DAX, that number 81.51.57. So it's at 81.40 to 81.52, we'll call it right now, that the DAX wants to travel to. You can see even with the pullback so far today, even with selling off since the high early this morning, what we can see is that until the DAX breaks below, in my opinion, the July 13th, 2007 swing point, that's down there quite a ways. That's all the way down to where on a pullback where the DAX should actually, well, no, it should pull back further than that on a pullback. But that's the first place where you're going to want to be paying attention to the weekly chart on the DAX. That number is 77.99.93 out there. So that's on the DAX. Still looks like it really still does want to move higher. Let's go take a look at the FTSE here. The FTSE over in the UK trading up about 0.6% this morning. That's up 38 points right now. Let's go ahead and put that chart here on the screen. What we can see here inside the FTSE trading up just slightly above that 1.618 butterfly pattern out here. Let's go ahead, and you can see that it is not as far off of its highs, but perhaps less exposure by the FTSE than the DAX out there. But let's go take a look at a weekly chart. I don't recall looking at a weekly chart inside the FTSE for quite some time now. The FTSE has not made it into its 2007 swing point high. Let's go ahead and draw the line across the screen here. The bottom part of that swing point is going to be a price level of 65.7420. That's July 13, 2007. As we put that line in black going across my screen, we can see, unlike the DAX, which is inside that, what we can see here inside the FTSE not being able to make it up there. Let's go out to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you this morning?
Yes, I was looking at futures in gold, the 1750 call.
1750 call. So you're not in the trade just yet, right?
No, I'm not.
Okay. So if we take a look at gold, it's trading down about $9 right now. 15.97 is the level that it's trading at. So it's pulled back a little bit, but the with the U.S. dollar index being up like it is this morning, it's really not. It's not pulled back that badly. If we take a look at, I'm just going to take a look at the most retracement low that we had out here off of the March 14th level to the high that was put in. And what you can see is it's done a 1591 was the 0.618 retracement. What's the time frame you're looking at on that call?
June.
And the amount was 1700?
1750.
1750. It might not be a bad call out there. What you don't want to see it do today here, Lou, is close back inside 1584.40. So that's the benchmark that you need to look at. If it closes there, then it sets up a run down to the 1554. But so far, all it's done intraday is made a nice 0.618 retracement. Alrighty?
Thank you.
All right, you bet. Folks, we'll be right back. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 20 points right now, out at 14,532. Composite up 9, trading out at 32.54 out there. The S&P's up about 5, trading out at 15.61, and the small cap's up 0.3%, up $3 out at 9.49. On the leading the charge to the upside, we've got Apple up $3 right now, trading out at 4.64. Dollar General up 2.33. That's up 0.4%. Veeco Industries, VECO is the ticker symbol. They're up 6% here this morning. Anadarko Petroleum up about 1.5%. That's up $1. Goldman Sachs up $1.23. Dollar Tree up $1.47. To the downside, you've got United Therapeutics off 6% this morning. Leading the charge, you've got Ashland Inc. They are down about 3%. Red Hat, RHT, off about 2% this morning, down 7%. BlackBerry Research in Motion, they're off 8%. PGT Industries, PGT Inc., PGTI is a ticker symbol. They're down 10% here this morning. Whole Foods Marketplace off about 1%, off about 75 cents right now. Our call number 877-927-6648. So I'll go back here real quickly. We had Lou calling in on gold. I went ahead during the break, and put up the 30-minute chart. That way, you're more easily able to see the .618 retracement. What it also was forming was a .618 Gartley buy pattern. Now, what we should see here, we should see a bounce in gold. What I've also got circled, or I guess it's not so much circled as it is squared, I've got highlighted. How about that? I'll use the word highlighted. So highlighted on the bottom of the chart show the last few times here on the 30-minute chart when gold moved down into the sold condition. You can see that it formed a slight bounce as well. In the case of the bounce here at 8 o'clock in the morning on March the 14th, more than a slight bounce out there. In the case here of the low that was put in 9:30 on the 22nd, what that did was a .618 retracement as well. So now what Lou would want to be paying attention to, anybody trading gold, it has formed a two-candle bullish engulfing pattern out here. You just don't want to see the lows of 1589 get taken out. If those lows get taken out, then what you will see is you'll see gold then move down to the .786 level. That, if we take a look at coming off of the lows at 8 o'clock in the morning, that's 1575. On the 14th of March, all the way up to the high that was put in at 9:30 on March 21st. What we'll see is around the 1583, 1584 level is where gold would then head to if it breaks that .618 Gartley buy pattern. That would set up a .786 Gartley buy. That's on gold. Let's go take a look at here. Let's go take a look at, as long as we're in the commodity area, let's go finish that off. Let's peek in on silver, see what silver is doing right now. Silver trading up about 2 pennies here, out at 28.71, so virtually unchanged. Silver still not looking as strong as gold to me. Just still really, very unusual, very, very unusual action to see such a protracted period, such a long period here of small-bodied candles. And today it is another one. I'm not sure what to make of it other than that is not normal price behavior inside the commodity market like this. Let's go peek in on light sweet crude. That, on the other hand, is on its way up, already hitting the .618 retracement off of its Gartley buy pattern here. 94.84 was the number. That's the .618 level. And what light sweet crude has hit so far is 94.81. Clearly looks to me like what light sweet crude wants to do is at least move up to 96.38, and if it gets up to $98, then we might see an expansion here. Now, what you're taking a look at, if you're watching us on TigerTV, how about TigerTV? Let me do this here. Try to pull this back. Well, it won't pull back for some reason. Let me switch over to the chart and come back here. Always a slight technical glitch. What you are looking at, if you're still watching the chart here on Tiger TV, you're seeing the rising price channel that light sweet crude has been traveling in, and it seems like I have. I'm going to have to do this and come back. Let's see if that will do it. Okay, good. So now I think I can go back. Don't know why that technical glitch happens, but every now and then when you're doing live TV, live radio, those are the things that happen. It's always how you recover, though. Let's go back to that light sweet crude. That way I should be able to pull it back here. Oh, boy. Okay, there we go. So as we pull it back, now you can see clearly the rising price channel that it is in. And it looks to me like we've got higher prices coming to us in light sweet crude out there. Let's go take a look at bonds to see what bonds are doing here this morning. Bonds had backed off slightly, and they're off of their session lows, trading out right now 143.03. Looks to me like bonds still want to go ahead and complete that test. They're really in the middle of the range here, but looks like bonds want to get up into that and at least test that January 2nd level. That is 144.29 out there. Again, they're trading right now at 143.02. Let's go take a look at what should we take a look at? Let's go take a look at how about the ETFs? Let's go take a look at the ETFs on a weekly basis, since we did finish out the week, and then we'll go take a look at some stocks that are popping and dropping. But let's go take a look at the SPYs here. The SPYs last week closing above that 154.54 mark, doing it with 647 million shares. Let me go back here to October of 2007. I'm going to put that in. So you can see here 620, the number in October of 2007 is 625 million shares. So closed inside there last week. He closed inside a swing point, even though it's on light volume out there. Still says that you may want to go tag that high. That high out there is 157.52. The Bears certainly had the opportunity last week to be able to push prices lower, and they were unable to do that. The key number here is the key numbers here that you're paying attention to on the SPYs, 154.54 and 157.52. So long as the SPYs continue to travel with inside there, truly sets up a likely run for 157.52. Doesn't have to, but it's a likely run, and until you close back below 154.54, that is what you have to assume that it is going to do out there. Let's take a look at the Qs here on the weekly chart. Now the Qs here nowhere near as strong as the SPYs. The Qs not even up to the swing point from September of 2012. That has 161 million shares there. Last week 156 million shares. But really what the Qs have is they've got that Gartley, even on the weekly chart. I believe we can draw in the Gartley sell pattern. 0.786 Gartley sell, so that is still in place out here. So that's where you've got some certain weakness in the marketplace. Of course, you got Apple up 477, but we had been showing that Apple had broken out of one of its trend lines out there. It's descending trend line. Or price descending price channel that it was in. So what we know that Apple wants to do is go tag the area of resistance out here. Let's go take a look inside. Let's go start taking a look at charts for stocks that are popping and dropping. Let's take a look at the daily chart here of Apple and what it wants to do. Volume, if you take a look at volume here on Friday, only 14 million shares out there, so losing a little bit of its mojo. The prior sessions, let me just refresh my screen, make sure I've got accurate volume out here. What Apple is doing is, it made lows out here with 20 million shares, moving up higher with 14 million shares. And what it's going to try to attempt to do, it's going to try to attempt to get back inside the lower part of its range. It wants to go tag the January 15th low, 483.38. That is a level of resistance. It's really only been tested twice now, so we'll see what happens when Apple gets up to 483.38, whether that is the extent of its move as it works off its oversold condition. It's done a good job of working itself off, but no real big moves up on the daily chart here from a volume standpoint. Now, as we take a look at Apple on the daily chart, we can see the trend line that it broke. Now let's go switch over to the weekly chart inside Apple. And inside Apple on the weekly chart, what we'll see, what it has done here so far this morning, it is, let me pull this down. Let me grab the right corner of the chart. What we can see as I pull this back here, you can see the descending price channel that Apple had been traveling in. And on Friday, really just closed just a tad above that level this morning, breaking out. So that says, about 500. So that 483, 500 is where Apple looks like it wants to trade to. Let's go take a look at United Therapeutics, UTHR. Is the ticker symbol. That is the leader in the clubhouse on the way down. Let's go see what this is doing. Gapping down volume, pretty decent volume this morning. It's got this untested high volume low out here. So here's a dangerous thing. Now there's a sign of strength, which that's what it is traded into so far this morning. But, just like the Europeans have to be really cognizant of having any excess reserves above 100,000 euros in their bank account. You also need to be the same. You also need to do the same when you can identify a high volume low on a chart that you are trading. So if you were inside United Therapeutics, you would be very cognizant and concerned about an untested high volume low that exists back here in October of 2012, the 24th. To be specific, 4.5 million shares down there that has not been tested. Now, your savior would be this little sign of strength out here. Let's draw the lines across the chart out here. and that's what we're going to be paying attention to on United Therapeutics. We'll go ahead and put this in red on both levels. What we can see, it's just slightly trading inside that gap up swing point. We're going to call it that December 14th level. That high is 58.11. Trading out right now at a price of $58 even. Steven, volume there, it broke out with 2 million shares, 1.99 million shares in just the first 15 minutes of trading, though 442,000 shares to the downside. So we're seeing volume come out of this. Again, the ticker symbol, if you want to take a look at it on your chart, is UTHR out there, United Therapeutics. What we can see on United Therapeutics also had a little bearish engulfing candle that formed out here on March the 13th. That level was tested with a candle that looks like a shooting star out here on March 20th. A little bit maybe too much of a wick at the bottom out there, but still you got basically two bearish candles that set up the resistance level. So resistance here really going to be the high from March 13th. That's at 62.82. You don't have to worry about that right now. Right now the key is what's going to happen here on support. This is a hammer candle if we were to close here right now today, but it's coming down with too much volume. Your real test to get any real information on this is going to be the low of that February 14th level. That's 55.52. You get a close below that. What you want to see is it come into that level with less than 1.9 million shares. But today, coming down hot with volume. Let me pull this back a little bit further. Here is a tested high volume low. So this looks like this is the behavior of this stock. As we pulled this stock back a little bit further on the left-hand side of the chart, folks, we came back to August 25th, 2011. This gaps down and does it with 4.2 million shares. Makes an even lower low out there, and then it makes an A to B equals CD pattern to the upside. We'll draw that A to B equals CD in here for you. So we can see it makes a 1 to maybe almost a 1 to 1.618. A to B equals CD. Then it goes ahead and it pulls back. And as we draw the line, we'll use black across the bottom of my screen out here. What we can see is that as price tested that with lighter volume back here in April of 2008. Actually tested it also in November of 2011 out there. Did I say 2008? I meant April 18th, 2012. So we can see several tests of that high volume low before it went ahead and moved out and then created, an A to B on the larger time frame. We come off of the lows here from October 4th, 2011. That's our A point. 36.55 is the A. The B point is February 6th high. That level 51.12, and then the final C point down here back on April the 18th. What you can see is also on the daily chart, almost making a 1 to 1.618 out there. That's on United Therapeutics. Let's go take a look at, let's see here, what is popping the largest? Veeco Industries, VECO. That is up about 9% out here. I don't see anything with regard to earnings, so let's go take a look at what this is doing, VECO, see if this is breaking out. It's up with some nice volume. Let's pull this stock chart back. This is running into, so this had a area of resistance that had an open window that was finally fixed. This was a window that took place. This was a gap down September the 21st. It closes at 34.96 and then gaps down with volume. The next trading session on the 24th, 2.5 million shares. That window, that gap was closed here on March the 14th and March the 15th. No longer really becoming an area of resistance. And this morning, gapping up above that area. In fact, it's also trading above its swing point from September 14th. Now, September 14th, 2012, 632,000 shares. It already has more than that this morning. Well, it has 500,000 shares, so not more than a 632, but it will have more than that during the day. Oh, you pull this thing back further. Now we can see this is trying to really break out above a level of resistance here that's been in place going back to 2011. 877-927-6648. Dow's up 43. S&P's up 7. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Back, folks. Dow up 44 right now. S&P's up 7. Let's go back to Veeco Industries, VECO. We can see this is today trying to break out above a long-term consolidation pattern, again taking us back into August of 2011. The black line going across the screen really being the top end of the consolidation. I use the line on the bottom here, not at the actual ultimate lows out here, but more so where price was consolidating right around the lows here of about $26 and change out there. So we're talking from 26 up to 30, up to 38 out there. So what are you, 26? So you're about a $12 consolidation on this equity. And what it is doing here so far, if we take a look at each of those swing point levels, August 16, 2011, 1.4 million shares out there. If we take a look at the next swing point high, 1.4 million shares on May the 11th. If you come back to the level here of August 9, 2012, you're down about 655, and then 632 on September 14th. So I'd say your benchmark for volume as a legitimate breakout, you'd want to see more than 1.4 million shares today so far, and it looks like it should be able to do that without any difficulty because it's already had 729,000 shares trade hands in 25 minutes. So let's assume the volume at least is going to get you over 1.4. Where will this take us to? Well, number one, what we can do is we can go ahead and use that $12 breakout and just simply add that to the top of the range. So we'll use 36 plus 12. I'm sorry, 30. We'll use 30. What did I use? About 38, I think it was. 38. So 38 plus 12, that would take it to $50. Now let's go take a look at the weekly chart, pull this back a bit further here. And on the weekly chart, your benchmark for volume is, the easiest volume is going to be 3 million shares from September 14th, 3.5 million shares the week of August 10th of 2012. Again, you're looking at about 3.5 million shares. And should you get that, $50 was the 1 to 1. If you just simply added the consolidation range to the top of the breakout, what we can see forming here is a 1 to 1.272 A to B equals CD would take you up to about $49.08, trading at $38.95 right now. So if you like to buy breakouts, this is a equity here that seems to be confirming a breakout to the upside. Now, if we take a look at this, had also really set up. Not only was this a resistance band, this line up here, as we take a look at the weekly chart, you had a little bear sash candle that formed after the week where it was testing that resistance level from May the 11th on the week of May 18th, the bear sash candle. Also, as it was testing that resistance level on September 14th, the following week you have a bear sash candle. So very easy to identify where the bears were hanging out. And at this stage, this is trying to trample the bears in the bull run on Vico on the weekly chart. Now, if you just take a look at off of the session high out here, the weekly chart high from June of 2011, I should say, that high is 57.67, all the way down to the low put in on the week of December 23rd, 2011 at 20.35. You'll also see a .786 Gartley sell takes you to 49.68. $50 is where Vico, V-E-C-O, looks to be headed to. Stay tuned today, folks. You've got following the Money Masters. We got our man Basil Chapman, then Larry Pesavento. We also have Daryl Martin, David White, the Ken Shreve Show for the Tom O'Brien, before the Tom O'Brien Show. And always remember, folks, you have an amazing power within yourself. And that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you soon.